Hi, and welcome to this morning's early global view. It is currently 6:45 a.m. on Thursday, December 10th, 2015. And it's been quite a wild ride in the equities, as you can see from looking at the charts on the short-term view of the S&P in front of you, and that's with good reason due to them being linked into the psychology of energy and commodities right now. More on that in a moment. So, what does all this mean to the markets? And looking at the U.S. short-term view of the S&P 500, hourly on the left, 30-minute on the right, it is up 4 points today at 2046. Now, this is important because after opening below 2060 to 58 yesterday, closed right around 2058 on Tuesday, opening below it yesterday on oil prices rebounding temporarily. This is the NYMEX lead contract January crude oil future, rebounding from the low 37s to retest its gap lower from Monday up in the upper 38s. This went all the way from 2058 to 60, got back above it, and went all the way back up into the 2075 to 80 resistance. We've expanded these charts. Take a closer look. It spent all of 20 minutes up there before the oil price slipping again back down into and then below the low 37s into the upper 36s through 2060 to 58 again on the downside, all the way to the next interim support at 2040 to 35. Now it's stabilized there in the second half of the day, and now we're up a bit, but there would still be very good resistance in all likelihood at those higher levels, 2060 to 58 initially, or back up at 2075 to 80 if it should get there. As importantly, if it starts making a new low below 2035, the next bigger lower support is down into the 2020 to 2010 range, especially the significant mid-August 2015 down break that was negated on the way back up after the FOMC minutes in October. It was tested and failed at the September FOMC meeting, but when the minutes were released in early October, the market decided bad news was good news. And what we can also see is there's a bit of downward bias because both the hourly and 30-minute MACD, the more important being the hourly, remains below its lower runaway band. And even if there is somewhat of a rally today, probably if it's no better than 2060 to 58, this would remain bearish. And that pretty much does it for the short-term view of the S&P 500.